Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hi everyone, welcome to this episode of All Things Policy. I'm Anisree Suresh, a research associate at the Takshashila Institution, and today we have Bhumika Sevkani, research analyst at the Takshashila, with us to discuss the latest announcement by China to implement absolute caps for steel, cement and aluminium sectors under the emission trading system as a response to the EU's carbon border adjustment mechanism. So, going back to what EU's carbon border adjustment mechanism means, it's kind of a tariff on carbon-intensive sectors like steel, cement, aluminium, and other sectors, which are imported into the EU to ensure a level playing field with the EU-produced goods that face carbon cost under the EU emissions trading system. So its main goal is to prevent carbon leakage, wherein companies moving production to countries with weaker environmental laws to avoid carbon cost and everything. So we already have an episode on carbon border adjustment mechanism and India's how India will be affected. So you can go back and check that. But as a recap on what it is and why countries like India should bother, Bhumika, can you please explain?
Yes, thanks, Anisree. So, beginning with EU's CBAM, it is essentially it was designed after EU's emissions trading system was completely put in place and working. So now it was designed to ensure fair competition by addressing the cost of carbon paid by European companies within the borders of European Union following their emission trading system, right? So wherein imports within the EU then become more competitive that relative to the goods that are produced within the EU. So it works by applying a fee on the carbon emissions in certain imports that is equal to the fee imposed on domestic products under ETS within EU. And by doing so, CBAM helps prevent carbon leakage, as you mentioned, where companies often relocate their manufacturing facilities outside of the EU where environmental regulations are lax and they avoid expenses of adhering to climate regulations. So now, to look into the sectors that it initially covers, now it applies to particular products which are, again, most carbon-intensive industries, already sort of hard to abate, wherein they require technological investments in order to reduce their emissions, such as so the industries initially covered are iron, steel, cement, fertilizers, aluminium, electricity, and hydrogen. So yes, these are the sectors covered, and this is the initial plan announced by the European Union, but they've also mentioned that they plan on expanding the sectors to other products.
That's very interesting. And like many countries across the world are coming up with various responses to this EU's carbon border adjustment mechanism. And you have some countries calling this as a unilateral protectionist move, in the sense that you're forcing some countries, and there's a kind of a tariff that they are putting at their borders as well. So let's try to understand this emission trading system in detail, especially like the recent announcements made by China. And so more important question here is what is a carbon trading system, what it does, how it affects the firms, all those things.
Right. So emissions trading scheme is a system designed to control environmental pollution by placing an upper limit on how much greenhouse gas companies can emit, and it's also called as the cap and trade system.
Okay.
The government essentially sets a cap, which is the maximum allowed emissions, and this cap is identified differently across sectors, and companies either receive free allowances or have to purchase permits, with each permit usually being equal to 1 ton of carbon dioxide or carbon dioxide equivalent greenhouse gas emitted.
Okay.
So if a company, for example, emits more than the allowances, they'll have to purchase more permits in order to limit their emissions as per the cap set, and if they emit less than the allowances or the cap, they can sell those extra permits and make a revenue out of it in the carbon trading market. So this creates a market price for carbon, and it rewards companies that cut emissions and essentially makes pollution more expensive for those who do not adopt to cleaner technologies or methods of production. So the idea here is to de-link economic growth and carbon emissions, or reduce carbon intensity of sectors and production. And carbon credits are another concept wherein they are certificates that are handed out when a project either prevents emissions, like if you're building a solar farm instead of a coal plant, which essentially removes or reduces carbon emissions into the atmosphere. You'll receive a certificate for that, which then again you can trade. So these credits then can be sold to companies that offset their own emissions, but offsetting again is usually allowed within limits to ensure investments in clean technologies for production.
Okay. So again, let me go back to EU's carbon border adjustment mechanism itself, like to get a comparison of this mechanism. So basically, EU importers of goods covered by the carbon border adjustment mechanism also register. They will register with the national authorities, where they can also buy the CBAM certificate. So the price of these certificates will be calculated depending on the weekly average auction price of the EU's ETS, the emission trading system allowances, which is basically expressed in euro per ton of the carbon dioxide emitted, like you mentioned. And so EU importers then will declare the emissions embedded in their own imports and surrender the corresponding number of certificates each year. This is the entire mechanism of this, right?
Yes.
So if importers can prove that carbon price has already been paid during the production of the imported goods, so the corresponding amount can be deducted as well. So that also means that if a country has its own ETS or emission trading system within its domestic economy, then they probably don't have to pay the tariffs at Europe's order until and unless there is a difference in the price they have paid, right? So here the EU's carbon border adjustment mechanism, what it does eventually is it's raising the cost for the exporters, definitely. And if a country has an ETS at home instead of the EU, they pay the taxes at their borders, but the overall cost of export goes up. So coming to the most important part of our discussion. So looking at the trade, looking at the impact it would have on various economies, let's first look at the China itself, then we will come to the Indian angle. So how do you think it will have an impact on the Chinese exports to the EU, knowing that China is one of the largest exporters to the European Union?
Right. So, as you mentioned, that if an exporting country has an ETS in place, the exporters will have to pay the tax within the borders of that country. And again, there will be obviously carbon price differences between EU and the exporting country. So if exporters are paying that tax within the borders, that will be deducted while they're exporting to the EU, but the difference they'll still have to pay. Now, coming to China's emissions trading scheme, it first began in 2021, but there were also earlier attempts to implement the ETS, which has been delayed, I think, since 2015.
Okay.
So the announcement of and there was also a recent announcement in 2020 of dual carbon goals in China, which is to achieve carbon neutrality by 2060 and to achieve carbon peaking by 2030. Okay. So announcement of these goals, and in addition to that, the implementation of EU CBAM has sort of accelerated the implementation of ETS within China as well. Now, if you to go back a little, there were pilot projects within China which started as early as between 2011 to 14. There were 6 different pilot projects covering provinces and cities, which included Beijing, Shanghai, Guangdong, Tianjin. There was Chongqing and Hubei as well. Now, these were essentially experiments to see how various industries or industrial sectors respond, the effect on emissions, and it also tried out different forms of penalties as well as different methods of capping the emissions. Could be historical emission intensity or could be benchmarks. So, for instance, Beijing's pilot programs covered the power sector, oil processing, and ferrous metal sectors, capping their emissions by looking at their historical emissions and historical intensity. And offsetting here was limited to 5% of the total emissions, which is how much they can offset through other projects that are reducing emissions and not actually implementing cleaner technologies within their production. So from 2021 onwards, the ETS was launched nationwide, but it only covered power sector then, which is responsible for, again, 40% of China's emissions. And then it gradually included steel, cement, and aluminium sector from 2024. So now, after this inclusion, China is again the largest carbon market that there is, and it covers 60% of China's emissions, all of these sectors. However, the system only currently utilizes free allocation of permits distributed on the basis of benchmarking and verified emissions. And so the free allocation is where the government sets a cap and they distribute the permits to the companies based on the historical emissions at no extra cost. So this was about China's ETS, and again, as we know, China is one of the major producers of carbon-intensive products like iron and steel and fertilizers, and it's and it is an export-oriented industry, and EU is one of the major markets. So EU CBAM again has been is said to have a major impact on these on these Chinese exports, which is why it was one of the reasons for accelerated transition within China's ETS.
So particularly to steel, aluminum, or the carbon-intensive sectors, which is, I think, the quite majority of Chinese exports to the EU itself will be affected.
Yes.
And the ETS that you're talking about, the full implementation will come from 2027 onwards? Like how?
Right. So it is already in place, but it's not. So as I mentioned, the benchmarking is currently based on historical emissions or the emissions intensity. So emissions intensity is where the cap is based on emissions produced per unit of output. So it doesn't cap your absolute emissions, so not your emissions that are emitted because of your total production, but it looks at per unit of output, right? So in terms of effectiveness in ETS, absolute caps are more effective in sort of reducing overall emissions of the sector, whereas emissions intensity is slightly less effective because then the companies can always show an increased output, and you know it's more it's more prone to being it's more prone to companies sort of finding a loophole and then evading the actual tax.
So, but the recent announcement by China in August, that's about implementing absolute caps.
Yes, so that is about implementing absolute caps in all of these included sectors, which will start from 2027.
Okay, that's great. Okay, so now the most important question that I wanted to ever ask you. So that's like, let's look at it from the Indian angle, in the sense like we did discuss this before, like the impact of carbon border adjustment mechanism on Indian exports. And we do export quite a lot of steel and aluminum to the EU, if I'm not wrong. And we are the 9th largest trading partner to the EU. And it's like, it's a very important partnership that we have the FTA negotiations going on. It's towards like, nearing towards the conclusion stage. So that means like EU is a very important partner. And since India doesn't have a proper carbon trading emission system domestically, that means many of our exports will be affected by the carbon adjustment mechanism, which EU probably have it in the full running implementation from January 2026 onwards, right? So that means like we have to have some kind of ideas about how we should address this, how we should go ahead. So before that, can you tell me a bit about like, what would be the impact on Indian goods, considering that we might not have a emission trading system?
Right. So, as I mentioned about China's ETS, right, and the loopholes that the companies can find and sort of report fraudulently and other things, there was also a recognition in this wherein there was an announcement in China about cases of negligence and fraud and falsifying emissions data, which they've talked about improving the reporting and verifying systems. But since China is issuing free allowances and there is a lack of transparency of the same, the Chinese government might as well overissue these allowances to exporting companies with no additional costs and yet make its exports to the EU highly competitive, right?
Okay.
So since China's carbon price under its ETS has remained lower than European expected Indian carbon prices, Chinese exporters may face a smaller carbon cost pass-through, especially for exports to markets with carbon tax such as the EU. Now, this could give Chinese goods a pricing advantage over Indian exports, to which EU is also a major market. So if we were to look at one of the sectors, the Indian sectors that will be most impacted by CBAM and then the highly competitive Chinese goods because of their ETS are steel and fertilizers. For instance, in steel, the EU was destination for 49% of India's steel exports as reported.
That's quite a lot. Yeah.
Yes, as reported in April 2025. And just steel exports amounted to $4.25 billion to the EU. Now, other markets, including the US and West Asia for our steel exports, have seen a decline. And in West Asia, Chinese are already offering competitive prices. Additional duty under CBAM would value up to, I think, 173 euros per ton of steel, which significantly affects the competitiveness of India's exports. And with China offering even lower rates, so
then that's a very bad situation because already our comparative advantage would be minimal and that would go down further. Okay.
Absolutely. And if this scenario plays out, it will be difficult for Indian exports to find other markets given our tariffs with the US and
yeah. So now mostly so right now China has an ETS, which will probably fully implementation will be done by 2027. And if India has to remain a key trading partner to the EU, that means we have to maintain our comparative advantage in the exports that we're really doing well. And that means India has to look at what are the policy options that we have. So considering all the explanation that you gave on the various aspects and the impact that would have on India's exports, I feel like there are three scenarios that we can look at. One, we try to diversify our trade. Then the most important question is to where? Right?
Exactly.
Already we have certain issues in the FTA and the tariff and everything that's going on with the US. That might not be a stable, reliable market as of now. And where else? China will be always a competitor. And this green protectionism seems like a trend that's just going to take off from here onwards.
Absolutely.
So that means that might be not a really good option. Then probably we have to look at having a ETS system of our own at home. Or then you also have to see how we can incorporate this in the negotiations that we might have. So what do you think about it? What are the options that we have? How do we look at it from a very policy angle? What are your opinions?
Right. So, as you mentioned, that green protectionism is going to be a trend moving forward. We see several other countries adopting it. So we have Japan, South Korea, and other countries adopting.
But that's more of an ETS, right? Emission trading system within domestically, not a tariff on any exports that coming into their country.
No.
Right?
So they haven't implemented in CBAM mechanism yet, but they already
that could
have.
Be the next stage. Yeah.
Yes, we can expect that to come about. An interesting example between Japan and South Korea is that they have interlinked their ETS trading systems, wherein carbon credits can be traded across borders, right? And EU has also sort of mentioned that it is ready to link its own ETS with India's if we implement it going ahead. One of the policy options, as you mentioned, is implementing our own ETS in India, and we already have started planning for it. So we have consultations going on, and it is likely to be so. They have announced a cap for different sectors, for industrial sectors, which are open to public consultation right now, and it is likely to come in place by next year. What are the advantages that ETS offers are, firstly, it will be helpful in sort of dealing with CBAM-like situations better going forward. The other thing is it's one of the cheaper ways to reduce carbon emissions as your economy grows, right? And it's also a means to generating revenues. If you use paid allowances or you use auctioning revenues from the permits, right? So some of the ways in which India can go forward is that it starts with the power sector, because again, that covers a significant portion of our emissions as well as in any other economy. So starting with the power sector, pilot projects to test various penalties would be an effective way. But again, that would take slightly longer than addressing.
But also, looking at the exports specifically to the EU, which will be the first, affected sectors, then I think steel, aluminum, or whichever the sectors that we do export quite a lot to Europe should get the priority.
Yes, so that is what I was mentioning, right? So it won't be that impactful in addressing CBM directly, but that has been the policy where we have sort of announced the coverage of these sectors, the iron, steel, cement, or fertilizers, all of that, export-oriented sectors first rather than power sector. But gradual inclusion of power sector would be more helpful if you were to look at reducing carbon emissions within our economy. So again, pilot projects would be helpful before we go full scale into it, because that would help us in determining various scenarios and the compliance that companies are sort of implementing or not. And it can also be a way to sort of tailor the ETS as per the Indian context, right? So one of the thing about the gradual inclusion of power sector is that it has a greater potential in significantly reducing emissions, but then it can also supply the rest of the market with cheaper credits to begin with, right? Because of the options.
So the other exporters maybe can buy their certificates from the power sector or whichever sector that's being the most priority ones, then makes sense. Yes.
Right. So it is important in keeping the carbon prices sort of low within your domestic country, right? So, and it's essentially because there are diversified options available for the power sector in terms of renewable energy, more cleaner forms of energy. Second is, as we begin with our implementation, it would be better to avoid free allowances. So now, because we're only beginning, we cannot completely rule out free allowances, but an implementation of sort of a combination of free and paid allowances would be better. So because free allowances would keeps carbon prices low, and there are no incentives for emitters to adopt to cleaner production methods, right? Okay. And if your carbon prices are low within the system, and if you also look at it in the export terms, you'll still have to pay the differential amount in the exporting market, right? Yeah. So a combination of free and paid allowances would always be better. Moreover, even partial auctioning of credits will enable the government to recycle the revenue generated from within the ETS and invest in cleaner technologies or compensate for negative externalities of energy transition in the long run. Okay. So India is also planning on caps based on emissions intensity, which might again offer lower advantages in terms of trade with the EU's CBAM and in terms of your overall compliance with the industries. So while emissions intensity again would be a good way to sort of ease the industries into the system, it would be better to sort of gradually move to absolute caps. And this is also something that the EU followed in its own ETS implementation, right?
Okay, yeah.
So yes, these were some of the things that we can look at in our own implementation of ETS. And lastly, there's also this additional advantage wherein if you have a robust ETS in place domestically, moving ahead, as I mentioned, you can link it with international markets, right? So which again, of course, domestically, the revenues will be there, but linking it with international markets will sort of have a even more significant, a further impact on investments coming from other markets into India in cleaner technologies, right? So if implemented with efficient, more transparent policies as opposed to China's, India also stands a chance in supplying cheaper credits to other markets, although international market links again are still under consideration. There is a UN Article 6 that was announced in, I think, 2024. But that also again is still under consideration. But if it goes forward, it would be beneficial for India as well, right? And so between India's efficient and more transparent policies to ETS and China's sort of lack of transparency, India can gain that sort of trust advantage in linking its own ETS with other markets. So
but
this
not suggesting with the China, right? But in the international market.
Yeah, no, not China, but like we can explore other markets. As I said, EU was also interested in linking the ETS once we have it. So this can also again act as a revenue generation stream for domestic firms that have been able to adopt cleaner technology.
Okay. That's really insightful, Bhumika, in the sense that I think the ETS system and the technicalities of having that, you rightly covered it nicely. So I think briefly, I just want to add this as well, like we have the EU-India free trade agreement negotiations going on. I think that's also one good platform where we can have these discussions and see how we can get more access to greener technologies from EU and, see how we can implement these kind of mechanisms at home so that, we are part of the wider initiative.
Yeah.
Thanks a lot, Bhumika. We'll be back with another interesting topic soon. Thank you.
Thank you, Anisree. That was great.
If you liked our show, dive into Takshashila's research on technology, strategy, and economic affairs. Check us out at our Twitter handle @Takshashila INST or our website takshashila.org.in.